Done. Okay, so we can start. Okay, good. Thank you. Good morning, everybody. It's now 11 o'clock in South Africa and Mozambique. So thank you all for joining. And this morning, we're going to be talking about investing in Mozambique, tax and legal implications in particular, and anything else interesting that comes up. I hope we can have an interesting session. Let me start by introducing or asking my three presenters, panel members, to introduce themselves. And perhaps if I start with you, Naimo.
Hi, good morning, everyone. My name is Naimo Jala. I'm a Mozambican lawyer, born and raised in Mozambique, studied in Mozambique. I've been working in this country for a bit more than 20 years. Started with law firms, then I joined three of the big audit firms, Ernst& Young, PwC, and Deloitte. Yes, proud Mozambican, love my country, and love the people of this country.
Great. Thank you, Namo. And Sergio, perhaps you go next, 1 minute or so or less.
Yes. Thank you, Russell. Good morning, everyone. It's a pleasure to be here. My name is Deshuda Barca. I'm the managing partner at DBA, and prior to that, I spent 5 years as the country tax and legal partner for Deloitte in Mozambique. So I have over 17 years in experience in taxation, working for the Big Fours and assisting clients throughout all the life cycle of companies, from investment structuring until strategies for these investments. It's really a pleasure to be here, and I look forward to our webinar.
Great. Thank you, Sergio. And Lance, perhaps quickly from you, please.
Thanks, Russell. Morning, all. Lance Collip. I run the corporate tax practice in South Africa and work closely with Russell. Yeah, hoping we'll have a good discussion and hoping for a lot of interaction. Let's see where we go.
Great. Thank you, Lance. And then quickly myself, I'm Russell Eastor. So I'm with Regan Van Roy, based in the UK, in the fine city of Norwich. But yeah, I've been with various other places over the years. I help with the Africa work for Regan Van Roy outside of South Africa and Mauritius. What else can I say? I wasn't born in Mozambique, but I worked in various parts of Africa over many years. And if I want to boast about my age, I can say I started my tax career in 1984. Enough about me. The format this morning, it's going to be a panel discussion. We've got questions we have prepared, and we'll present to the three panelists, and they will talk about them. If you've got anything else you'd like to add, I'm afraid to manage the thing, we've muted you all, but you are welcome to pose questions in the chat box, and we'll try and pick them up from there, or ping me a message if you can, or one of the other people through WhatsApp if that works better. We will bring a halt to the proceedings on the hour at 12 o'clock Southern African time. But we could run over slightly if that suits people. But we'll do a formal wind up on the hour. So that's it. I'm going to start us off now with posing the first of the questions, which is to Naimo initially. Mozambique had a bit of a reputation in the past, and maybe over some years ago, of being not the greatest country to invest in. Poor, highly indebted, and some governance issues. You and Dercio obviously live there and work there. Why do you think foreign investors might think now is a good time to be interested in investing in Mozambique?
Well, let me start by saying that I agree. We're still indebted, and we still have governance issues. But I wouldn't say that Mozambique being poor is a correct affirmation. I think Mozambique is rich. I mean, we have natural resources in abundance. It's not just normal quantities; it's abundance, and this goes from land for agriculture. It goes for mineral resources, energy resources. So it just goes beyond normal numbers in these areas. So this is one thing. The second is, this is a country that is still very greenfield. So it's a country still being built. So we are still developing our basic infrastructure, let's call it roads, bridges, power infrastructure, water infrastructure, sanitation, and beyond that, I mean, urban areas are also growing a lot, with a lot of works being done in the main cities. Plus, you have some significant mining activities, which altogether represent big opportunities for different levels of involvement, direct involvement in those projects of development of the country, and indirect. So this is something that it's already happening. I'm not talking about the future, because for the future you do have some other major projects, the gas one that everybody knows, plus other ones like Pandankua and others. But you already have a lot of investors. I'm talking about big companies, big names, international companies from all over the world, including South Africa, already doing significant investments in the country. And I think Dersu can help me here, just providing a bit more detail on some statistics, recent statistics, that will help just back what I'm just saying.
Yes, thank you, Naim. Just for you to have an idea of the size of the opportunity Mozambique presents, I'm going to share here with you a couple of numbers related to foreign and national direct investment relating to the year of 2023. So we had 20,000 million US dollars of foreign direct investments in Mozambique, and also 400 million US dollars of national direct investment. As you can see, in terms of investment in Mozambique last year, there was 1.4 thousand million US dollars of investment in Mozambique. There were 277 investment projects approved by the investment agency in Mozambique. So it is important also to understand what are the main, let's say, the top 3 sectors that investors are focusing on. So the first one is the industrial sector. The second one is the tourism sector. And the third one is the service one. So these are the top 3 sectors that the investors have been focusing on. So also, where are these investments coming from? So the major investments are coming from Mauritius. Mauritius has been and still are one of the preferred locations that investors adopt to invest in Mozambique. So the first location is Mauritius. The second one is China. There has been a huge investment coming from China. Last year, it was around 358 million US dollars coming from China offering direct investment in Mozambique. And the third country is the US. In terms of number of projects approved, so I think this is also very important indicator so that we understand, okay, how many investors, how many projects are being implemented from the various countries. So we have China with 58 investment projects. After China, we have South Africa. So although South Africa has not been, in terms of volume, one of the top 3 major investments in Mozambique, but in terms of number of projects or number of companies operating in Mozambique, South Africa come into second with 28 projects. And then we have India with 17.
Great, thank you very much, guys. That's interesting. I think, yeah, reinforces the point that we've got a lot of people interested in this webinar. So there must be something happening. A bit of an up and coming country, which I think is in line with my understanding of the place. And thinking back to my first visit to Maputo in 1991. Right. So what Dershia mentioned there, Lance, was some investment from South Africa, a lot of individual investments, perhaps not the same monetary numbers as from China, but still a lot happening. Have you seen much, Lance, of South African businesses looking at investing or increasing investment in Mozambique?
Russell, I think there's a lot of interest, particularly amongst the big corporates, and I think most of our big corporates already have a presence in Mozambique. I see a lot of interest in the agri space in particular. But I mean, I think that there's opportunity for really good returns I think in Africa in general, including obviously South Africa, but Mozambique in particular with infrastructure projects, where the pricing, I think in terms of returns is, to me, you'll struggle to get the same return in most other countries in the world. So I think a lot of interest in South Africa, a lot of our big corporates are already there. And yeah, hopefully that trend will continue to grow.
Yeah, great. We hope so. And I think, it's not perhaps a country for the faint-hearted, but South African investors perhaps are less faint-hearted than those from some other parts of the world. I suppose you mentioned, both Dershia and Naima mentioned some natural resources investments, and people investing in natural resources tend to have to invest where the resources are. You can't move the coal to another country, so that's all useful. And I say we have a lot of participants who obviously showing some interest in the place. I think let's move on to something more specific. And this was for Dershia initially. Can you think of where your investors are coming from, South Africa or other common law countries? Can you think of what tax or legal or other features are somewhat different in Mozambique and which they need to be aware of, rather than coming with assumptions, whether it's exchange control or civil law or any other issues that you can think of? Dershia.
Yes, sorry. Yes, thank you, Russell. So one of the key themes that has been, let's say, an historical key point when investors are coming into Mozambique is we usually see a lot of transaction between the local company and the head office or another group companies. So in Mozambique, there are a couple of rules in terms of VAT, where if you acquire services from a non-resident entity, let's say your head office charges the local entity for management fees. There is a rule where the local entity has to self-assess VAT. And if this will not have a financial impact if the company has transactions that are subject to VAT and can claim input VAT. If not, then this will have a financial impact, since the company will have to self-assess output VAT, and we will have to pay that to the revenue authorities. So one of the key points here is that although this might seem has an administrative procedure, so if the company doesn't follow this procedure, then there will be a tax impact. So it is important to highlight that. Other point, which I think there is a different approach in SA, it's when we have services from, let's say, from management fees or other type of service from abroad. There might be withholding tax on these services, even though there are no effective payments. So withholding tax in Mozambique is not only due on the time of payment, it might be due also before payment when the income becomes due. So this is to try to put some pressure on the taxpayer, since if the taxpayer accounts for that cost and doesn't pay for 5 years or more, it has the benefits of reducing its taxable base. Another, I think it's a key point, is Mozambique has rules on indirect disposal of shares. So not only direct disposal of shares are taxable in event in Mozambique, but also indirect disposal of shares are subject to tax in Mozambique, are subject to capital gains in Mozambique. So that is very key for investors. So moving to accounting, so there are two fundamental points that investors need to be aware of. So the first of all, it's that Mozambique has their own accounting system, which has two types of chart of accounts. One chart of accounts is more focused on SMEs. It's a chart of accounts for SME. Then we have another chart of accounts, which is a chart of accounts based on the IFRS, meaning that companies can raise the fair tax and update the policies as the IFRS updates. Lastly, and which we have been finding this very important is that there is a possibility for companies to adopt a functional currency different than Meticash for reporting its statutory accounts and annual income returns. So there is this possibility. Of course, it's not automatic. It needs to be requested to the tax authorities. The advantage of this is that it allows you to not have double accounting, and also it reduces your impact on exchange rate differences.
Thank you, Dasho. Naima, have you got anything to add to that that list of interesting issues?
Yes, what I would like to add, maybe from a more purely legal perspective, because this is civil law based compared to common law, the main difference is that everything here is written in terms of rights, in terms of enjoying those rights. It's written in laws, it's written in regulations. So to become binding, it must come from a law, a written law. And this has implications. And I can give you some examples so people can understand the difference. One of those is in contracts, for example. Our contracts tend to be shorter than the ones that come from common law countries, with a lot of definitions, like 50 pages contracts. Because we have written laws, we avoid the definitions and we use a lot of remittances to the law. But this has the other side, which is some of these laws are not flexible. So even if you are free to enter in the contract, whatever you agree with the other party, some laws do not allow you to do that. So it's, you do have the references of the law, but also it becomes a country with a lot of bureaucracy and inflexibility. Perfect example is the fact that the Mozambican government sometimes signs agreements outside with other governments for specific projects, and they agree on terms and conditions, including some incentives, which have no legal grounds in the written law. So when they try to implement that, it doesn't work because the authorities here say, okay, I cannot implement this, tax incentives or work permits for X number of foreign employees. It just doesn't work. And the same happens with, we have a specific example now. You have a lot of projects for electric vehicles. Okay, this is new. This is clean energy. It's top priority. It's part of the sustainable development goals. The Mozambican government started importing some vehicles for public transportation, but we have no written framework, legal framework to accommodate that. So the buses right now are parked waiting for the law to regulate the whole activity. So these are some of the challenges you face when you have a written law. And some more mundane ones, I would say you have an exchange control. If you don't follow the written law correctly, you make one small mistake and then you are unable to make payments abroad, for example. In labor relationships, for example, you might find someone committing a serious infraction, but if you miss one step in the disciplinary proceedings, I mean, the whole thing falls apart and you will not be able to dismiss the employee. And these are just some examples of it.
Well, thank you for those points, Desio and Naimo. I think, yes, there are clearly differences between a civil law and a common law jurisdiction. That point about the written law, I think, is very important. Withholding tax, it's not unique to Mozambique. Lots of countries are addicted to withholding tax, and understanding the law and protecting yourself from it is key. And we've seen that in many places. The indirect disposals, we may come back to that later. It's been a subject of some controversy, I know. But yeah, thank you for that. Yeah, and the general difference. I was thinking to myself at one stage, if I have a new career, perhaps I'll come back to life as a notary in a civil law country. Because you mentioned bureaucracy. Lance, have you seen any particular challenges for South African investors in Mozambique?
Yeah, I mean, I think it's a learning curve for me as well. You know, advising clients who have a presence in Mozambique, and where I've seen, funnily enough, particular difficulty is if there's a winding up or or liquidation, because I think before you get to tax the liability of directors, the company law is obviously very different. So the whole legal basis is very different. And I've seen investors really struggle to liquidate and wind up, companies, particularly where they, as invariably is the case with companies that are being liquidated, their losses, the shareholder loans that need to be sort of written off, and these can be quite challenging, things to. And so these are typically very difficult, assignments. But so I mean, I think we and Desio, you've helped us quite a bit on on one particular client, but it's an absolute minefield if you don't, if you're not well advised. So yeah, Russell, that is where I've seen particular challenges for South African investors.
No, I think that's useful. I remember the one on the company that wants to be wound up, and the 3 different advisors who've given different suggestions at different times, and most of which don't seem to work when it comes down to actually trying to implement them. Hopefully we've now got something better. But yeah, no, I think that goes to that point on exchange control and the importance of written law rather than common sense. So yes, it's very easy to get into a mess. So that's useful. Thank you. Now let's go on to something perhaps more specific. And Naimo, in a couple of minutes, have you got any? Does Mozambique offer any particularly enticing incentives to investors, especially foreign investors?
Yes, yes, of course. There's a whole legal framework for foreign investors to benefit from specific incentives. You do have the general ones, and you have specific incentives for specific sectors of activity. And this is foreseen in investment legislation and specific legislation applicable to specific industries like mining and oil and gas. What I can say is that the incentives are split between tax incentives, and I would say most of them are tax incentives. And then you have other incentives like the ability to make payments abroad. Incentives like the number of expats that you can have in your payroll. But most of them are tax incentives. You have reduction on taxes, let's say the national taxes like corporate income tax, exemption on VAT, on importation, exemption on duties. You have tax credits, tax breaks. You have accelerated depreciation. So there's a couple of tax incentives mostly that you can apply for. And this will depend on if you're a general project, a specific project. You also have incentives that are connected to a specific area, which are the special economic zones created by the Mozambican government, like industry-free zones and other like rapid development zones. So essentially, this is how it's structured. It comes with a lot of conditions, and the list of incentives is not that big. So what I would like to say is that companies should just take the time when deciding to invest and analyze them and analyze the impact of those incentives, because a lot of companies just don't use it. Okay, there's a fee that you pay, 1% over the amount of the project. But looking at it in detail, there might be something that is useful for investors. And one other aspect for companies coming from South Africa, for example, it's the free trade agreements, which are in place. And what I see in reality is that just people just don't look at it and don't analyze how that free trade agreement could impact their business from South Africa to Mozambique, for example. I mean, I've been with the customs authorities; they don't know it well. Customs agents, they don't know it well. So customers, even less. So I think there are a lot of opportunities there.
Well, that's good to hear. Yeah, so there's upfront planning, which I think goes across the continent when investing and probably beyond it. Yeah, the base tax rates can be quite high, but there are incentives, and it's worthwhile doing some homework and taking some advice, I think, is the message I'm getting from that. So thank you, Naimo. I think, Dersho, yeah, just countering that, if you could think of other 2 or 3, in your mind, strange or unusual aspects in the Mozambique tax system, things that trip people up.
Well, I wouldn't call it strange, but yes, there are. I think there is one key point that I would like to stress, which Naimo mentions, which is the excessive formalities of our legislation. So it's really excessive and goes into the extremes. To I'll give you 2 examples so that you can better understand it. Let's say usually investors, when coming to Mozambique and they inject cash through loans or so if they don't have the proper paperwork, if they don't have, let's say, the loan agreement in places, if they don't have the resolutions in places beyond the issues that they will face in exchange control. So what usually happens here is the tax authorities consider that has business revenue. So instead of loans, and that has, we have seen a lot of litigations due to this lack of formality, although and there are points where we justify, but sometimes they are so fixed in the formality, they say no, but it don't have the agreement. And when you try to backdate it, they say no, but when we audited, the agreement is not in place. So then you start a fight. So formality is very important, really important when investing in Mozambique. Another point on formality, it has to do with the formality of the invoices that you have from your suppliers. Let's say we understand, and from a business standpoint, we understand that Mozambique has a very large informal sector, very large. And I think our tax law doesn't really assimilate that. What usually happens is that, so if the invoices doesn't have a set of requirements that are in the VAT code, so what usually the tax authority does is that they say, oh no, well, we won't accept you to claim the input VAT. That is the first point. The second point, they will say, we won't accept this cost has a cost from a tax standpoint, meaning that you will add back to your taxable income, which is 32% general rate or 10. And then they will say, we will tax you autonomously at 35% because of this cost. So your tax burden is, if you add everything up, it's almost 100% disallowance. But we don't understand that the market is very informal. So our law doesn't reflect our reality.
Yeah, no, that's an interesting point, and not unique to Mozambique. I think the rules are designed for formal businesses, don't work so much for the informal, don't work for the entrepreneurial, who perhaps bring or chaos than organisation sometimes, and then that doesn't fit very well in your formalised, documented approach to things, as Lance was talking about with the loans earlier. So that's useful. This point on VAT invoices seems to be a growing contagion across the continent. And yeah, spreading from VAT into income tax. Oh, your invoice isn't valid, therefore you can't have an income tax deduction. Even worse if it's at a higher rate. So that's an important point. I think not just in Mozambique, we're seeing it in other places as well, and increasingly so. I don't know who's responsible for spreading that contagion, because I think it's one of those things that's perhaps more useful for the government than it is for the economy. But it also sounds to me there's probably some scope for continued lobbying of the government to improve their tax system. Enough from me. Staying with Dershio, in fact, looking at any particular areas of attention or emphasis that you're seeing from the Mozambique Revenue Authority, the tax administration, apart from that one you just mentioned about valid VAT invoices and the income tax consequences? Anything else they concentrate upon?
Yes. Other than that, there are a couple of areas that the revenue authorities concentrate on. So there are 2 or 3 type of reverse engineering analysis that they do, which really doesn't make sense. So there is one where they, to assess the amount or to validate your revenue, the revenue booked in your account, they reverse engineering through your bank statements. So they look at your bank statement and try to reverse engineering to see if the amount that they will find matches the amount that you have booked as your revenue. They also do the same with the movements in the client's account. So try to compare your sales that are in your accounting records through the sales that they reverse engineering through the movements in the client's account, which doesn't make sense because you have credit notes. So there are lots of things that might be there that are not really revenue. Oh, there is also a third reverse engineering process that they do, which for us, this is the one that is completely out of this world, where they try to validate the costs that you have booked in your P&L, the cost for other goods and services, through your claim of input VAT. So they start with your VAT returns, they find and supposed cost, and they compare it to what you have booked in your account. So if you have booked over that amount, they will say you have overbooked costs, meaning that they will add back your taxable income and other aspects. So there is also another area which has to do with reconciliation, and this is an analysis that they always do, and we find clients always having issues there. It's differences between your VAT returns in terms of sales and your accounting records. Of course, we understand they are different, but this difference needs to be reconciled. This is key. If you don't reconcile this difference, be 100% sure that they will analyze it and they will come to a number, say that you have underpaid or corporate tax or VAT, and you have to pay it. So we understand due to the accruals that yes, there might be difference, but please reconcile them. Just one which we have been seeing lately is, and this is mainly because of management fees. So we understand that between head office and local entities, there are management fees. But what are they starting to do now is when the client asks for a tax clearance certificate to be able to make the payment, some tax directorates are asking now for the reports that all other evidences that the services has been rendered. So they want a report showing everything that was done. So yes, I will go on and on, but I think these are the key ones.
So it certainly sounds like the Mozambique tax authority is not sitting there sleeping. They're causing significant challenges. Lance, I was going to ask you if your clients are having any particular experiences in dealing with Mozambique tax authorities.
No, not particular, but I mean, I think it's worth just noting, from a South African perspective, what, some of what was said there, I think are global, one will find in any given country. I mean, I think almost every revenue authority is hard pressed for funds, and we'll push the envelope as far as possible to. I mean, we've seen a lot of that in South Africa. And it sounds what you've described there around the reconciliations reminds me of the dreaded IT14SD, which we've had, in which a lot of South Africans will know of. But I think at the end of the day, Mozambique is not is not seen as a as a tax haven, as a sort of a place where people are going to just to lower taxes. So there's nothing untoward. It is worth noting that in terms of the treaty with South Africa and Mozambique, there should be no withholding tax on management fees or technical fees. And my sense is that SARS will be interrogating 6 quat credits, far more rigorously going forward. I mean, any form of refund is being audited and queried. I mean, I think the main thing from a South African perspective, that is pervasive will be transfer pricing. And again, I mean, I wouldn't think that there'd be an intent to, to undercharge Mozambique. But, very often in groups that is sort of, where there are charges or recoveries that there is no margin necessarily. I think one just needs to be a little bit careful that you don't trip yourself up from a South African perspective and from a transfer pricing perspective. So if it is significant cross-border payments, then I think transfer pricing is a very important box to tick.
Just on that transfer pricing, Lance, building on that, does Mozambique, and this is more for you, Dircia, does Mozambique have a particularly bureaucratic approach to transfer pricing? Have you got to provide policies or files at a given time? Are there particular transfer pricing returns that have to be filed at a particular date?
Yes, with the introduction of specific transfer pricing rules into force from 2018, there are a couple of procedures that needs to be followed. Yeah, there is a return that you have to file at the tax authorities from a transfer pricing perspective. And also, you must have a transfer pricing file by the deadline of submission of your statutory accounts. The point here is that you doesn't need to submit your transfer pricing file to the revenue authorities, but it need to be ready. If they ask for it, you need to be able to provide to them. And bearing in mind that under the law, you have a maximum of, I think it's 15 days to provide site information. So meaning that don't wait until they request it, because we know that preparing a transfer pricing file might take months.
Russell, maybe if I can just add also, because from a South African perspective, we have this regime called the headquarter company regime, which is not, to my mind, being taken up with any significant amount by of clients or companies in Mozambique, or just generally. But there are benefits to using that regime because there are carve-outs from the controlled foreign company rules and also from transfer pricing for some types of affected transactions. So any local based group or holding company could always consider stripping out foreign investments, including into Mozambique, into a headquarter company, just to benefit from some of those concessions.
Good. Thank you for that, Lance. So I think, yeah, what I'm hearing is, yeah, the transfer pricing does require some thinking about, but it's not as difficult as certain countries where you have to actually file your local file at a given date. It just has to be ready. But I agree, 15 days to get it ready would be a bit of a challenge. What I'm hearing is a lot of points you're saying, Dershio, and what the tax authority does are not unique to Mozambique, but perhaps made a bit worse by the formalized system and by the civil law jurisdiction things. That reconciliation of VAT returns, I've seen it a lot. That general approach of tax authorities of treating all taxpayers as owner-managed businesses, which must be taking understated sales, it seems fairly common. But yeah, that's how the world is. I think one of the things I was going to mention earlier on, because I've seen a couple of questions coming up about the recording. The recording will be available afterwards. I meant to say it at the start. It will be available. We will send a link to it to participants, and it'll be on our website, I hope. But you'll see there's no slide deck, so that will be all that will be sent. Let's move on to the next question then, please. Oh, one other thing I was going to say before I get to the next question, I haven't seen too many actual questions coming up in the chat box. So we've got questions prepared, which we can talk about, but I think now would be a good time to add yours. So then we can end up talking about what you want to hear about rather than what we want to tell you.
Russell, I see there is one question.
Okay, I'm not seeing it. Go on.
It says it's a question to Naima and Dershio. Everyone is aware of the challenges faced by the country, including its political situation, business constraints, and tax structures. What are the key actions necessary to overcome these challenges in both the medium term and the long term? I'm glad that's to you, not to me.
Yes. Also, who wants to go first?
I know, Dershio, you're never shy
Yeah,
to give you all.
So I think the key points of doing business in Mozambique, yes, we understand there is a lot of challenge in terms of bureaucracy, in terms of tax legislation approach from the tax authorities. We believe the key point is first have an advice or research first before investing. So what we usually find is, yes, investors rush without having all the proper information on how the law works, and not only from a strictly law perspective, but also from a practical perspective. So I think this is key. It's not only what is written, it's also important to understand how they interpret it, how they apply it. And this has been historical. One of the main issues that investors face is they say, oh, but it's not written in that way. But yes, but we understand that the authorities has we say the cheese and the knife on their hands, and they can delay, let's say, an issue of a business license. They can delay the issuance of a tax clearance certificate, and we know and understand that will impact your business, because in the business world we need to be expedite. So what I would recommend, have a very good advisor, understand how the law and the practicalities of the law works, and draft, like say, a roadmap. So I think this is the key. Comply. If you do that, then you will be safe, definitely. I don't know if Naima want to add one point or two.
No, I agree 100%. That is the key to coming to a country like Mozambique. You need to understand that it's not that people are not honest, or they keep on fabricating interpretations. It's the way Mozambicans think. Sometimes you might think, okay, we imported laws, so we should interpret those laws as they interpret where the laws came from. But that's not correct. I mean, we have the right to import the laws and then do our own interpretation of the laws. We just use those laws as a reference, but we have our own environment, our own reality, and we are free to interpret those laws as appropriate, provided we don't run away from the letter of the law, of course. But this is something to yes.
I think
Russell?
that's well understood, Naima. I think the point there is you're right. The law is the law, and you have to follow the local interpretation of it. I think but it's all very well and good to say this is the law, but the law is there to serve the country. And I suppose if you're starting off with a bureaucratic system, relatively high tax rates, quite a lot of different taxes, quite a lot of strange practices, is there any campaign by the government? They change the law to try and collect more revenue, perhaps from time to time. They could change the law to create incentives. Do they change the law to try and make it simpler or more effective? Is there any such project going on?
For sure, we are seeing this more and more. They're trying to make things easier. There was a recent change in the commercial law, and the main objective was to simplify things. If you look at the changes in detail, you can see that the whole purpose was to reduce the cost of operating governance issues, and also to reduce bureaucracy. We have now recently approved legislation on exchange control also. They even called it liberalization of exchange control transactions. So they are trying to accommodate this, because sometimes they put limitations because of specific reasons, economic reasons. That recently there was just lack, not recently, currently, there is lack of foreign currency in the banking system for local companies to comply with their obligations with international suppliers. And for a couple of weeks or months, all the payments went to import fuel to the country. So everybody else could not pay $10,000 abroad. Okay, there was not. So some of the measures they put in place is just to try and stabilize that. So they put some limitations. So when the road is free, they also come back and say, okay, let's make this one easier for you guys. So there is this approach from the government.
Okay, good. I hope that answers the questioner, and thank you, Valance, for bringing that up, because I didn't see it. But yeah, let's go back to until we see any more questions coming from the floor. I'll go back to some of the questions I had. I mean, I think we've talked quite a lot about the issues to think about when investing in the country. Tertio, what would be the main issues to think about when exiting an investment in Mozambique, do you think?
I think the main issues that we usually find investors facing when they want to exit the country are mainly due to exchange control. I think this is the first thing. Why exchange control? Because first of all, as Naimo referred to, if you don't register your investment, they don't recognize that as your investment. They don't allow you. You don't have the right to repatriate that, or you. So, of course, from a legal standpoint, you could still do the transactions, but from an exchange control, that will be an issue. That will be a nightmare. Even and we have seen situations, and this is really common, where there are transaction or commercial transaction between the shareholder and the subsidiary in Mozambique. And there is a balance there. This balance is standing for more than 2 years, and it hasn't been paid. But when they try to pay, to leave, they will say, no, you cannot pay because since there has been more than 2 years, this needs to be pre-approved by the central bank. You need to write to the central bank informing that we have this balance for more than two years, and please register that. If this doesn't happen, they will say, no, register that as foreign direct investments. So I think more of the issues we find in the exchange control is registration, or another point that usually companies find now, even when they try to pay dividend or disinvest, is if they didn't register their foreign direct investments. So the central bank doesn't recognize them as investors. So which also causes another issue. one of the biggest point that which central bank lately has been a little bit flexible is the need of, if you are doing a transaction between two non-resident entities, the need of having the cash flow passing through the Mozambican banking system. So even though it's a transaction between two foreign entities, there is the rule, there is a need to have this cash flow passing through Mozambique. So what we find there is that it needs to request the central bank an authorization to not passing through the Mozambican banking system, but which can be accepted or rejected, because that's also a requirement that it's in the investment law. So another point is tax, capital gains tax. If you don't pay your capital gains tax, then it's when every time you want to have an exemption or you want to say there's no capital gains tax, be prepared to justify it in a robust way why there's no capital gains tax. Because the principle is that if there is a sale or if there is a disposal, there is tax there. If there is not tax, then it's more complicated.
Yeah, I think that's all understood. The first point, I think the big lesson there seems to be, if you're going to exit, get things right when you first invest, and that preparation up front will make life easier later, which I think is not unique again to Mozambique, but it is very sound and useful to reiterate it. And I think every country that's got exchange control is perhaps similar to that, but Mozambique perhaps more than some. And the other point on CGT is leading me on to the next one I'm going to ask you, which is, yeah, I suppose if you've got a failing business, you'd hope there won't be CGT, because if I spend $100 on something and I sell it for 50, I shouldn't have to pay tax, and I hope that's the case. I suppose it might depend on how Metacash has moved against the dollar. But thinking more broadly, again, it's a bit of a contagion we're seeing spreading from South Asia, probably. If I sell a Mozambican company, there's a capital gain. If I sell a company overseas which owns a Mozambican company, does that have a Mozambique tax consequence, what we might call an indirect disposal? Dershi, I think I'll pass that one to you initially, and
Naimo, that's you.
Naimo wants it, does he? Okay, okay.
Yes, there is tax there. So the indirect disposal provision was introduced mainly due to the transactions in the oil and gas sector. What we call it, was a rash decision from the tax authorities due to one major transaction that occurred around 2011, 2012. Which they just introduced an article at the time saying that indirect disposal are also subject to tax in Mozambique. But there are no specific guidelines on how are you going to tax these transactions, because we understand that in an indirect transaction, there might be more than one asset. There might be more than one jurisdiction involved in the transaction. So what is the apportion method that the companies are going to use to allocate either the revenue in terms of selling value or on the cost side? So we particularly have seen 3-4 situations where if the taxpayers manage to justify why it's using that amount as the cost price, the tax authorities accept this. We have seen cases where the taxpayers use the cost of the asset as the cost of the shares to assess the capital gain tax. We have seen a transaction where it was justified, the taxpayer used the cost of the shares of the Mozambican entity, because they had a huge cost of the shares, to justify the cost price for assessment of the capital gain tax. So there hasn't been a clear or direct rule on that. It depends more on what are your arguments to justify the apportion and also the amounts that you want to use. But yes, there is this rule, which in fact we think it was not well thought, because we understand that companies that are listed in the stock exchange, there are daily transactions in terms of selling of and buying of shares. And it's really not manageable. It's not practical. So every time someone sells, you tax, and then buys, and then it's really not. It was a rush that we understand why it came from, but it's really not yes, not well addressed.
Yeah, no, thank you for that. That's my impression as well. There's some practical challenges, especially I think for the listed foreign companies who've got investments all over the place. Mozambique's only a small part of it, and there's no de minimis provision in the law. Yeah, the technicality seems to be it could come up every day. I've got a question here from Candice. I'm going to see if I can read it. I can't read it. Where's it gone, Candice? Candice,
it was just a question. Yeah, it was a question that came up in the chat box that I didn't want you to miss. And it was, in a scenario where a shareholder makes a loan to a subsidiary company and no interest or income has been generated, what should be done in situations like these in the tax perspective?
Right. So, well, I suppose one element of that might be if you've got an interest-free loan into Mozambique and ignoring any issues on the other side, so would Mozambique have a problem if no interest was charged? No.
And then if it's from South
not at
Africa,
all.
would South Africa have a
That's
problem?
what they want. That's what they want. That's what they prioritize.
Yeah, I have seen some countries where they say, no, if there's no interest, we're going to deem interest so we can have withholding tax. Malawi and Kenya come to mind.
Australia in particular as well. But I mean,
Right.
if that is a South African holding company, then then the answer would be you have to charge interest. But that is where using the headquarter company regime, for example, can also be helpful.
Yeah. Yes, and I've seen issues out of Mauritius as well recently, where they say if you've got an interest-free loan to your foreign subsidiary, even if it's not able to pay it, we still want to see an interest return in Mauritius, and we're going to tax it. So it lands up to be a problem. I think it's one of those questions. Yeah, the helpful answer is probably try to avoid the situation. I think the other points on that might be whether you'd have any problems if the company who's borrowed can't afford to repay it. I think that brings us into the questions Dershia was talking about earlier of the exchange control complications that can come. And did you properly document your investment and the loan at the outset? Because not doing that tends to cause problems later on.
Yeah, Russell, sorry, just to add, I mean, I think they also, South African exchange control, implications that one has to always consider, because, often it's a sale of goods and, and then it just sort of sits there as a loan, but, but our regulations require that payment must be received or, otherwise it needs to be placed on record. So these are just things that over time become very difficult to unwind, really.
Yes, as we've seen. Case. Yeah. No, I think that's the point. I think people coming from Europe, the States, UK, Australia, where they haven't got exchange control, tend to forget about these things because their memories don't go back that long. I've got one here. What is the minimum turnaround time for company registration, and how much does it cost? Quick and easy, hopefully quick and easy question. I think for you, Nomo, how long does it take to register a company? How much does it cost?
Yeah, I mean, it's rather quick to register a company. What usually takes time is some specific licenses. But in terms of getting the company existent, it's the commercial registration and publication in the National Gazette. It's rather quick. I would say 2 weeks. It's becoming more and more efficient. Sometimes they have technical problems, but normal conditions, in 2 weeks, you could have the company registered. The cost was brought down now, as I said, by the new legislation on commercial registrations. The biggest cost used to be the publication in the National Gazette, and now you're not obliged to publish the whole articles of association. You can just publish parts of it, the most important one, and the rest you put you just register at the legal entities register office. This is something that it's foreseen in the law, but technically it's still not being implemented. But this is where we're going. So the cost to register a company, government fees, I would say it's not more than $500, around that, excluding licensing, because licenses depend on the type of license you'll be applying for.
Okay, I presume that depends on the sector and location. Thank you for that. And I hope that answers the question. There's another question here. Now, I'm conscious of time. We've hit the 12 o'clock time. Well, we'll keep it open, but obviously those who have got pressing engagements will leave. I think Dersho and myself and Naimo are available for a few more minutes. Lance, I'm not so sure.
I need to leave.
Yeah.
Have a good weekend all, and thank you again. Bye-bye.
Thank you. Thanks, Lance. I will do a formal thanks now, I think, anyway, so that it's done, but then we'll keep the thing open for a few more minutes and the recording will still be open. So I thank you all for coming and I hope you found it useful. And hopefully we'll have opportunity for further conversations about some of the points that have come up or otherwise. So thank you for all your time and thank you for the presenters and the panelists, and thank you also for Candice behind the scenes in helping us organize it. I've got this one question in front of me here, which I can see, which is saying the government of Mozambique needs to ensure focuses on business creation, job creation and production rather than solely on paying taxes, especially during the initial stages when a business needs to grow and stabilize. If the emphasis is placed on taxes, SMEs are not able to grow and prosper, which I think is a fair point. We started talking about it earlier. What do SMEs have to do to overcome these challenges?
Well,
yeah.
So first, I mean, like I said, you need to understand how the laws work in the country, so you don't pay more than what you should be paying. Sometimes it becomes expensive because you didn't plan it well, and then you get hit by surprise costs, either mistakes on taxes or mistakes in other legal compliance issues. But I mean, there is some growing movement in terms of gathering SMEs, because it's a matter also to putting some pressure on the government and bringing the issue to them, make them sensible to this situation. The unfortunate reality in Mozambique is that less than 10% of the companies are contributing to GDP. Okay, so the government automatically focuses more on them and just forgets about everybody else. Okay, so in terms of number of entities, for sure, I mean, 90% or 95% are SMEs. So there's a growing exercise in terms of gathering these entities through economic associations and taking this message to the government. And I think this is the way to go. Economic associations hasn't been working well. They are seen more as protecting the interests of some, but we can see that some economic associations are now coming up and really tackling these issues of SMEs and taking the message to the government. And the government, we can see, is trying to accommodate them by reviewing legislation, making some adjustments even on taxes. So it's a matter of just keep pushing the government to look at the SMEs as serious contributors to the development of the country. And
Good.
This is not idealistic, it's reality. It should be done.
Good. Thank you for that, Naimo, and I hope that helps. I think, again, it's not unique to Mozambique, but it's perhaps something that I think, the first rule is try and be informed as an SME like everybody else and not get nasty shocks. And the second is, for organised private sector to turn and be talking to government to improve the laws, make them a bit fairer, recognising that a lot of job creation and boosting the economy comes from SMEs, and even big companies tend to start off small. So that does need nurturing. I hope that the World Bank or the IMF missions also have their input into bending the government's ear to try to improve things. Sometimes works better than others, especially when governments are focusing on finding money. Right, I think, Candice, was there another question I saw, which I can't see now?
I think we're all good now.
Okay, I was going to ask one, or maybe two. One was, are there any restrictions on foreigners owning land? Because there used to be. No?
Yeah, the law hasn't changed in that regard. You do have the right to apply, but you apply under certain conditions. You need a project, a business related to the application for that plot of land. If you're a national, I mean, you have more access. And there are conditions also to use that land. You need to comply with whatever you promised to do. Otherwise, it will be taken away from you. But you still have those restrictions. You still have those.
There are still restrictions. Thank you for that. And the other question I had, because this is again something perhaps rooted in the past, are there any limitations on how much you can pay your employees?
Not really. So there are no limitations on how much you can pay your employee. I think there are just two key points here. One is that we have a rule of minimum wages per sector, and I think the second point is that almost everything you pay either directly has employment income or fringe benefit. It's taxable under IRPS, under individual income tax, with some small adjustment. But yes, but there are no limitation. You can pay $100,000 per month, and that should be fine.
Okay, and you'll pay your taxes, which is fine.
Exactly.
Okay, good. That's how it probably should be. I think there's some sort of Marxist history at one stage that I'm remembering. But yeah, good. Glad to hear that. I think, Candice, if there's no more questions, there's not, eh? If there's
nothing else,
then I think we shall bring it to a close. And I shall again thank you, Tertia, thank you, Naimo, thank you for answering the questions, thank you, participants, for coming into it and for the questions that were raised. I hope you found it interesting and useful. If you've got further questions, please reach out to any of us, or all of us, and we'll see what we can do to help. The recording will be available. Candice, that's correct, eh?
That is correct. The link will be sent out.
And what's this from? This Natasha? I can't see it. Where has that message gone? There's something just come in from somebody. I'm sounding vague. Can you see it, Candice?
No, it must be on your private chat, Russell.
I'm trying to find out where that is. Sorry. Yeah, I don't know. No, not seeing it. No, I don't know. What's that say? No. I'm trying to see it. I'm not seeing it. No. Okay. I think we'll have to deal with that one later. But thank you very much, and thank you again. Sorry for this slight disorganization at the end here, but we do thank you all very much. As I said, the recording will be available on the website, and a link will be sent to you. So thank you very much, and have a good day and a good weekend as well. Thank you, everybody. Bye bye.
Thank you.
Bye bye.
Bye.
Okay, thank you. Bye bye.